Hey, it's Mike Hambright with FlipNerd.com, and welcome back for another exciting VIP interview where I interview some of the most successful real estate investing experts and entrepreneurs in our industry to help you learn and grow. Today I'm joined by Scott Ferguson, CEO of the Private Loan Store, who's a private lender to real estate investors. And today Scott is going to share a lot of information on how lenders look at you and how you should evaluate prospective lenders for your business. But before we get started, let's take a moment to recognize our featured sponsors. RealtyMogul.com is an online marketplace for real estate investing, connecting borrowers and capital from accredited and institutional investors. Get a rehab loan fast and close in as little as 10 days. Rates start as low as 9%. We'd also like to thank National Real Estate Insurance Group, the nation's leading provider of insurance to the residential real estate investor market. From individual properties to large-scale investors, National Real Estate Insurance Group is ready to serve you. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of FlipNerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky. Hey, Scott, welcome to the show.
Hey, thanks for having me, Mike. Appreciate it.
Yeah, happy to be here. I'm happy to be here. I'm happy you're here. So
great.
Thanks. But you know what's interesting is I know we're going to get into a topic and talk a lot about what you look at from prospective people that you want to lend to, and also what they should look at in a lender. And I don't think a lot of people think of it that way. I think a lot of real estate investors tend to say, if they'll give me money, I don't care who they are. But there's a lot more to it than that, as you know. And so It'll be interesting to kind of pick your brain on that. But before we get started with some of those details, tell us a little bit about your background and how you got into lending.
Okay. Well, my background is comprised of startups. I have started 7 companies. I have since either sold or merged all those companies off. The current companies I have a real estate investment company and a private lending company. And that's where I focus all of my time now. So I started my first company at the age of 20. I've never worked for anybody else. I've kind of been self-sufficient and kind of plowing that road all by myself for the entire career I've had.
Yeah, that's great. And so how did you get into, I know originally you started actually investing, you're an investor now. I know you hold a bunch of rental properties, but kind of talk about how you made the decision that you wanted to be on the lending side versus actively necessarily buying and selling houses.
Yeah, well, I really started the real estate career in about 2009. Probably a bad time to really start the career, but I saw an opportunity. I saw a lot of depressed values and started investing in real estate, buying, flipping, buying rentals. Worked that for about 2 years and realized for my skill set and for what I like to do, I would be better on the lending side of this business. I've borrowed a lot of money. I've used hard money lenders, banks, friends, family, private lenders, and realized that that lending side of the business fits a lot more in line with my skill set and what I'm good at.
Okay.
So a couple years ago, I started a private lending firm, and we now service quite a few states and provide lending to real estate investors, mostly for fix and flip investing.
Yeah.
And small commercial deals.
Okay. And why don't you kind of can you share a little bit about that skill set? You said your skill set's a better fit for the lending side. Can you talk about maybe what some of those things are, like for folks that are looking to get started or have already started and they can't seem to make progress, or not that you didn't make progress, but just some of the things for you that made sense for you to be more of a partner to real estate investors, to lending to them than necessarily being the investor yourself?
Yeah, those skills for me are finance. I have a pretty strong background in finance and running companies. Process. You have to be very process-oriented to be a good lender. There's a lot of things that can go wrong lending, so a good process is paramount. Deal analysis, deal structure. Those are the things that probably are my forte. Those are the things I'm really good at.
Yeah. Okay. And so can you share a little bit about we talked a little bit before the show about your investing theory, and a lot of real estate investors just assume real estate is the only thing out there. That's what they do. And of course, that's ridiculous. And of course, there's a lot of people that for a long time, the only way they could invest or that they thought they could invest is in the stock market, right? Which that's actually changing quite a bit. Real estate is becoming more of an asset class that other investors that traditionally don't invest in real estate can invest in. But can you share what we talked about a little bit ago about your kind of theory on investing, not necessarily just real estate investing?
Absolutely. So everybody should be an investor, as simple as that sounds. And there are a lot of things to invest in. And I try to categorize everything into really two categories. There's income investments and there are growth investments. And in each of those two categories, there are bank or Wall Street type investments and there are alternative investments. So in your growth category, you have bank or Wall Street and you have income, bank and Wall Street type investments or alternative investments. And when you're talking about growth, those things that the banks or Wall Street provides are going to be things like stocks, mutual funds, the typical 401k choices you would have. Mm-hmm. In alternatives, in growth, there are a few things. There are precious metals. There are real estate, fix and flip type investments. When you move to the income side of the equation, you still have those same two categories, the Wall Street type or bank type investments, and you have the alternatives. The Wall Street or bank investments in income are things like CDs, bonds, annuities, things along those lines of investments that provide an income. But when you move to the alternatives, there are things, oil and gas, real estate. So there are a lot of investment choices, and we're talking today specifically about some very specific investments. Could be growth or income, but they're in the alternative space. Mm-hmm. And a balanced portfolio is going to have a mixture of some of those things. It's not going to all be real estate. It's not going to all be stocks and bonds. So a savvy investor is going to have some mix of those and really understand where their money is deployed and what kind of returns and when that return is coming. They're really going to understand that portfolio well.
Right. And so, can you talk about some of the best sources of money for real estate investors? I mean, I know there's some real estate investors. Sometimes early on, people think hard money is their only option. There's some that cringe at the idea of using hard money because they know that's typically synonymous with high rates and points and things like that. So there's a lot of different places where real estate investors can get money, and probably it's wise for any real estate investor that's listening to this to have more than one source of money for their business, because you don't want the success of your entire business to be tied to any one source. But talk a little bit about where the best sources of money are for real estate investing that you believe.
Well, I don't know that there's one best, but there are typically four main categories of sources of money. You have banks. You're typically going to have the lowest interest rates at banks, but the biggest headaches. Yeah. It's time consuming. There's a lot of paperwork. It's a frustrating process right now to get a loan at a bank. But you do get great rates and terms. There's hard money lenders. Higher rates, much easier to get, a lot less headache. The money's always there. It's quick. It's easy. And if you're borrowing short term, the higher interest rates should not have a significant impact on your deal profitability. As long as you're buying the deal right and you're in the deal right and you're not long term, hard money is a great solution. There's private lenders, private individuals, doctors, lawyers, things like that are looking for alternative investments for their portfolio. Right. And it's, those monies are great. You can get great terms, very flexible, not heavy underwriting. The problem with those guys, they go on vacation. They invest in other things. So their money's not always available. It's not always a reliable source. And then you have your own cash. Own cash is easy. It's always there. It's available, but I think it's probably the least intelligent move to use your own cash in investing in real estate.
Yeah. Most people, unless you're independently wealthy, that'll dry up quickly one way or another. So
it dries up quickly.
Yeah,
it dries up very quickly, and you have better uses for that cash.
Yeah. If you're a real estate investor and you've been doing this for a while, you quickly realize that the leverage is the name of the game.
Right.
Yeah. So, talk a little bit about, from your perspective, you've been on both sides of the fence, how a lender evaluates a prospective borrower for a deal in terms of, I guess every aspect that you could evaluate them on, but in terms of their level of experience and how they talk to you and how good they are at buying, all those different perspectives. I mean, I don't think we've ever had anybody on the show from a lender's perspective to say, well, here's what we're really looking at. Everybody assumes it's just the deal, but there's got to be more to it than that.
There is. So first impressions are everything.
Yeah.
When you first approach a lender, you need to look professional. You need to look like you can get the job done. You need to look like you have experience. And, that first impression is very important to a lender because that sets the tone for the conversation moving forward.
Right.
Past that, the deal becomes important. So you want to make sure that you're providing your lender with a very clear, concise picture of what the investment opportunity is, because that's what you're really providing. It's not just a deal you want to do and you need some money for. It's an investment opportunity for a lender.
Right.
And think about it. If you were going to purchase some stock from a company, and they just said, "Hey, I've got this deal. It's down the street. I'm going to buy it for this and sell it for this," would you really be invested? There's no story to that.
Right.
There's no meaning to that. There's no passion in that story. It doesn't really give the lender a great feeling. It just, it's a deal. There's thousands and thousands of deals out there to do. How do you make yourself different from everybody else? Is you tell a story, and you tell that story with facts and figures and analysis that you've provided. You should know how much it's worth, and you should be able to support to the lender what it's really worth. The lender's going to do independent research and find out what it's worth, but it's going to provide a lot of confidence if what you say it's worth is what the lender feels that it's worth after they've done their analysis.
Sure.
When there's 30-40% difference in valuations, lender becomes nervous as this guy doesn't really know what he's talking about.
Yeah.
Why would I lend somebody money who doesn't know what they're talking about? Probably the chances of success really aren't that high.
Right.
So there are things you can do right up front in the initial stages of the conversation to win favor with a lender that makes you look good in the lender's eyes and instills confidence in the lender that they know or have a good, reasonable chance of knowing that you're going to be successful in the project with the lender's money.
Yeah. And talk a little about how specifically you and lenders like you that lend in large parts of the U.S. or multiple states do that, because most of the relationship is done, I assume, via phone and email, right?
It is. And that's okay. It's all it really takes. So we lend in many states, and what we typically will get. So I will just tell you from personal experience. We have a website, and people can submit deals on there, and there's an option at the bottom of the form to attach additional information. So you could attach whatever you want. It's a resume, a deal summary, pictures. You can attach in there whatever you want. But I would say 80% of the people that apply for a loan attach nothing. So when we get it, we see a name, a property address, what they think the value is, and how much money they're looking to borrow.
Right.
The ones that have information attached go to the top of the pile. Those are the people that work for me analyze the first because it's the easiest to get started with.
Right.
It's much easier to start with something where you have a much bigger picture than trying to take a little tiny picture of the entire deal and get started and do any sort of reasonable initial analysis.
Yeah, back to that partnership level. I mean, how could your presumably a partner you're trying to work with be impressed upon your sloppiness if you're not willing to help really go overboard to spoon feed them with here's everything you could possibly need and then some,
Right.
Yeah.
Right. Yeah. So that first impression is important. I've had submissions from one extreme to the other. I've had emails come to me with an address and say, "Will you fund this?"
Yeah.
I don't know. I've never met this person, but I get an email with an address that says, "Will you fund this?"
Yeah.
Those just get deleted. And on the other extreme, I have a full submission that's got a professional-looking presentation. Pictures with market statistics. What are the days on market for this area? 3 comps. It's almost like a CMA has been provided. Mm-hmm. A full scope of work, what we're going to do to this house and why that's going to create the value in the house. That's a much easier place to start for a lender than just an address of a property. Will you fund this?
Of course, yeah. So what advice do you give for real estate investors, and this is going to be aimed towards newer folks that are looking for money, that they should look for in a lender? Because I think a lot of new folks just assume, hey, anybody with money, I'll take it. But you don't want to find your spouse that way. You're going to have to live together, maybe not forever, but at least for some period of time with your lending partner. What are some of the things that you think that prospective borrowers should look for in a lender?
I think all good real estate investors build teams, and they can be contractors on the team, attorneys, realtors, title companies. And a lender should be part of your team. A lender is an integral part of building a business. Now, if you're a real estate investor, just want to do one or two deals a year, you want to use your own money, that's fine. That's perfectly fine. But if you're really trying to grow a real estate investing business, you're going to have to borrow money.
Yeah.
Bottom line, if you're going to grow, you need access to capital. Having access to capital from somebody that can provide that capital reliably, consistently, and at terms and rates that work for your deals. A lender should also provide insights. I talk a lot of my borrowers out of deals because I don't think they work. I have a lot of experience in deal structure. I have a lot of experience, buying and selling real estate. So I talked my borrowers out of doing deals a lot of times. When they think it's a great deal, we do analysis. We look at things a little differently.
Yeah.
And you can't measure that value of not doing a deal that you lose money on.
Right.
It's hard to measure that value, but a good lender will help you steer clear of bad deals.
Yeah. That says a lot, because I haven't personally had this experience, but I know of other people that are lenders that they love to take a house back. I mean, it's part of their objective is to take a certain number of houses back because they've got your money and probably can make some more money on top of it. And I think, if you're looking to build a business, you want to build a recurring stream of revenue and business from keeping investors safe and in the game. And if you make a bunch of money on, some money on one person one time and they're knocked out of the game, then that's not a great sustainable business model either.
That's not. I have never taken a house back. I just don't get myself into those kinds of situations where deals can have a chance of going bad like that. I'm not saying it will never happen. Things happen, but so far I have not taken a house back. So that's, in my opinion, being a better partner to my investors' team than actually being a lender that's just looking out for themselves.
Right. And I think every small business can appreciate the power of recurring business. And if somebody treats you right and helps you stay safe, and every once in a while maybe even talks you out of a deal that you probably shouldn't be doing, then that's got to come back around. And I think from a real estate investor perspective, you should appreciate that for sure.
Yeah, I think it's valuable.
Yeah,
I think it is.
Yeah. So spend a little time talking about how, especially I guess for newer investors or even those that have been around for a while, what they can do to kind of package themselves, package their experience or lack thereof, whatever it is, to present themselves to a lender that if they want to start a business or they want to build their business, and it's not just transaction to transaction, how they can kind of package themselves to be more appealing to a prospective lender.
Well, every investor has a background. It may not be in real estate, but there's a background, there's a skill set. So highlight the skills that are applicable to real estate investing. And if you were a marketing person before, marketing is a very important part of real estate investing.
Yeah.
If you're a construction expert, that's a very important part of real estate investing. Highlight the expertises that you have. And any place where you're weak, bring somebody on your team that fills that weakness. So if you're not good at marketing or you're not good at technology and computers, bring people into your team that fill in those places where you're weak. Don't try and be everything in a company. As a real estate investor, if you're doing wholesaling, if you're trying to do rehabs, you're trying to hold on to some properties for rental income, that's a lot of work. That is a business that takes more than one person, in my opinion.
Yeah.
So don't try and do it all. Do what you're good at, and fill in your weaknesses with other team members. A strong team will look much better than a strong individual to any lender.
Yeah. Yeah.
So I think that's one way you can separate yourself and set yourself apart from other borrowers or other investors.
Yeah, and for any of those folks that are listening that are investors, I mean, the challenge that we talked about this a little bit before we started today. That one of the challenges that most lenders have is they don't have unlimited capital. So it's going to come to a point to where, at one point or another, where they have limited funds, and you want to make sure that you're on the short list.
That's right. That's right.
Yeah. Well, Scott, can you share some of your thoughts on as real estate investors get more experience and they have access to, not just access to capital, they've maybe built up some cash reserves and things like that, why they should maybe consider lending themselves to other investors?
Sure. That's I made the transition from a full-time investor doing a lot of rehabs and rentals over to the lending side. A couple of reasons why I did that is risk management. When you are a borrower, I think you're assuming more risk just by inherently borrowing the money and doing the deals. As a lender, I can limit my risk with several things. Well, we write the terms of the note. We have a down payment. We limit our LTV, which is a ratio of the lended amount to the value of the property. So in deals where we feel, we'll set the LTV a little lower on deals that we feel are more risky. We go a little higher when we're a lot more comfortable. So that is something that we control, not the borrower. So lenders, as you know, if you go to the bank, who has all the control? The bank has the control. You sit down in front of them and you do what they say, and they tell you what they're going to do for you. So I like to be on the other side of the table. I like to set the terms. I like to be in charge of the deal. I like to have the control. It just feels better to me to do my investing that way. When you are the other piece of that is when you are investing and you're making down payments. You borrow money, but you're putting in additional money to get the project purchased or rehabbed or whatever. The riskiest capital, even if I was putting in $90,000, I was making you a $90,000 loan, Mike, and you were putting $10,000 in, and the property's worth 120, let's say, just to pick a number. Who's in a more risky position? Is it me or is it you?
That's me. Yeah.
It's you. You are in a much riskier position than I am. Even though I've lent a lot more money than you have, you are in a riskier position. Yeah. Now, if we've both done our jobs right, everything's going to work out just fine. But if for some reason things don't work out, I'm going to assume less risk in something not working out than you are.
Right. Absolutely. Absolutely. Well, tell us a little bit about your company and how you work with investors, and ultimately how folks can learn more about you and as a prospective lending partner.
Sure. Well, I don't quite fit the mold of what people think of private lenders, and I don't really fit the mold of a hard money lender. I'm kind of in between. I'm kind of bridging that gap. So my money's always available. It doesn't go on vacation when I take a vacation. I don't invest in other things and can't fund your deal, like if you're using your attorney or a doctor or something that has some extra cash. A high net worth individual likes to fund deals, but they're not always available and they're not quick, and right. Things can happen. A hard money lender, you've got fairly low LTVs, you got high points, you got high interest rate. So I kind of fit in the middle. Neither of those two lenders provide you a lot of advice, a lot of insight, a lot of help getting your deals done. They just provide the money and expect you to pay them back with a return. I kind of fit in the middle of that. I have zero or low points. I have reasonable rates for private money, but I JV on a lot of the deals, so I can provide a higher LTV. We will share typically in the net profits of the deal, but I provide advice. I've got a lot of experience. I coach real estate investors. I've got a lot of business experience. I have a lot of contacts across the country, so I help borrowers get deals done. My goal is to make sure the deal gets done successfully and everybody wins.
Yeah.
Not a lot of lenders are on your team in that manner. They're on your team as a funding provider, and that's where it stops.
Right. Right.
So that's how I bridge the gap between the different types of lenders.
Okay. Okay. And if folks wanted to learn more, where do they go, Scott?
We have a website, privateloanstore.com. Little information there. You can submit deals there, and there's a contact link on there if you need to talk to me or somebody in the company. You can get a hold of us there. There's a phone number there.
Okay.
As well.
And where all do you lend at? I know you lend in about half the U.S. or so, but just generally speaking, where do you typically lend?
Typically the southern states.
Okay.
Fair weather states. No particular reason other than it's easy to do business in most of those states, easy to get to from where I'm at. And we don't go too far north. We don't go northeast, but California across to maybe Virginia.
Okay.
And down is we lend in most of those states.
That's a lot, yeah. Awesome.
It's a lot.
Awesome. Well, Scott, any words of wisdom, final words of wisdom you want to share with either prospective borrowers or newer real estate investors that may have an answer burning, may have a question that they want to ask, but they don't necessarily know what it is yet about lending?
I would say the one thing I see very commonly is people are looking at dollars of return versus percent return or ROI. A couple of things that we monitor very closely are gross margin and net margin. Percentages, not dollars, percentages. A lot of people think for some reason when they get to the larger dollar properties, you do $1 million property, it's okay if you make $100,000 profit. That's a lot of money. And it is a lot of money.
Yeah.
But it's a 10% margin, which is a very thin margin.
Yeah.
And I would caution anybody, 10% margin is too thin. Too many things can go wrong, and it is not hard to lose 10% of value in a property where you end up making nothing or losing money.
Right.
So that's one very common thing that I see a lot of that I would caution your viewers and really any real estate investor is make sure you're watching out what the gross and net profit margins are on a project.
Yeah. Yeah, that's good advice. I tell people too, even on the lower dollar deals, sometimes you need to look more at dollars than percentages because the percentages may not add up to a whole lot of dollars. For folks that are buying a certain percentage of ARV or whatever they be, when you get down below $100,000 or certainly below 60 or 70, those percentages don't mean a whole lot.
That's true. There is a flip side to that coin.
That's right. Awesome. Well, hey, Scott, thanks so much for joining us today. For those of you that are listening, we'll add a link to the private loan store down below here so you can click on that and learn more about Scott. So, Scott, really appreciate your time, and thank you for joining us today.
Thanks for having me, Mike.
Okay, please stay in touch.
You bet.
All right. Are you a member of FlipNerd.com, the most robust real estate investing platform in existence, where you can find off-market wholesale deals and great vendors literally in your market? You can get access to advice from experts and learn about local clubs and events right in your backyard. If not, please visit FlipNerd.com and register for a free account. You can register in less than a minute. It's pretty much the coolest site that's ever existed in the real estate investing industry, so get on over to FlipNerd.com.